Good day to you all. My name is Paul Edwards, registered representative with New York Life. As you all know by now, I work with individuals and I work with business owners. I help you to invest wisely so that you can save and have enough funds to retire comfortable. And I also help you to protect yourself, your loved ones, and your families with life insurance and with long-term care. My name is Paul Edwards. You can reach me at 321-557-1155. I hope you all had a great weekend, and I'm expecting that this week will be a very productive week for you. Today we want to speak about whole life insurance. What is it? As the name says, whole life, this is a policy that lasts for your entire life. This policy also grows cash value and can be used as an asset in terms of retirement. It is also classified as a fixed asset. Many times individuals might be applying for a loan or doing business transaction, and the loan officer would ask you, do you have a whole life insurance? Because if the whole life insurance has cash value, that cash value is classified as a part of your fixed or financial assets. So there are different types of policies. A term policy, which most persons are familiar with, lasts you for a specific period of time. So we call that the term of the policy, whether it is 10 years, 12 years, 1 year, up to 20 years, and over and more. But once that period of time comes, that policy basically expires or become too expensive to continue. So let us say the individual is 30, 40, 20, a 20-year-old guy with a female with a 20 years term, come age 40, that policy is ready to lapse. And if he wants to keep it, he's going to pay the premium based on his birth age, and it will increase annually after that. So sometimes it becomes too expensive to keep. But for individuals who want to make sure they have policies that last their entire life, they take out a whole life policy, which protects you for your entire life. That policy also grows cash value. So in a brief nutshell, a 20-year-old, let us say, is doing $100 per month, which is $12,000 per year, $1,200 per year in that policy. In 10 years, he would have contributed approximately $12,000. In 20 years, he or she would have contributed $24,000, and so on. And in 30 years, they would have contributed over $36,000. However, after that 30 years period, the cash value is going to be maybe around $45,000. In other words, you contributed 36. But if after 30 years you were going to surrender the policy, you would get back about 40 or so thousand. Magnificent, eh? That's why it is called a fixed asset. It gives you the protection in case of the worst case scenario, but it builds a reserve in case you want to surrender the policy. In the scenario I just played, you get back all your contributions. The death benefit also increases. So the same 20 years policy, the young man took out, the death benefit was $100,000 for $100 per month. In 30 years, the death benefit is going to be $150,000 because that also increases. That is why whole life policies do so well. However, when you meet with me, we would determine what is the best policy, whether it's a term, a universal life, a VUL. There are many options that we believe will meet your needs. And so that is when we'll decide and inform you which is the best policy to use. Again, my name is Paul Edwards. My number is 321-557-1155. You can call me today. You can call me now. And before we go, continue to make today a best day of your life. Let today be a blessed day and the best day of your life.